Today's topic focuses on COVID mortgage forbearance in San Diego. We will discuss some important things if you have a mortgage forbearance due because of COVID. My name is Brian. I'm of Trusted House Buyers in San Diego, and today we explore the forbearance due to COVID in San Diego real estate. Thanks for watching. The first question you may ask yourself is, now that we're years beyond when COVID started, now what actually is going to happen to folks like us? Well, many homeowners have been and still are to this day struggling to make mortgage payments as a result of the coronavirus pandemic. Here is information you can use that will include ideas about your options and your rights. If you are facing money struggles, I'll tell you, you are not alone, and Trusted House Buyers might be able to help you. The last and final option we'll discuss today might be the easiest for you to achieve and will relieve you of all the headaches of COVID forbearance. We all know that COVID has impacted many families in many different ways, that's for sure. The majority of homeowners are eligible for forbearance for a coronavirus-related financial hardship. So let's first discuss what forbearance is. Forbearance is when your mortgage servicer or lender allows you to pause or reduce your mortgage payments for a limited time while you regain your financial footing. Many individuals found themselves maybe unemployed and unable to make their mortgage payments during the pandemic. This is where the help comes in. One major step you need to do and to take if you find yourself in this situation is you must request the forbearance from your mortgage servicer. Taking this action now can help you avoid foreclosure and can pause those mortgage payments while you pull through this difficult time. Having financial relief during stressful situations would help lift a very heavy weight off of this particular homeowner. So here at Trusted House Buyers, we also recognize that each homeowner has a very specific situation and different needs. And we are here to help ease any of that process related to the non-payment of your mortgage. So again, a first step that you have to do is tell your mortgage servicer that you're going through a financial hardship due to COVID. Keep in mind this very important fact. They are not permitted to ask you for proof of hardship if you have a federally backed loan. Now, let's dive deeper into forbearances and how COVID has caused hardship and some things that really are starting to play out right now that we're a few years into it. For instance, what if a borrower exits forbearance but is re-impacted financially by COVID-19? COVID has really lasted much longer than we all anticipated, and many find themselves in a tricky situation when their forbearance plan has ended and they still cannot resume those mortgage payments. The borrower must contact the servicer if a new forbearance plan is needed. You may be pleasantly surprised at what can be offered, and there is certainly never any harm in asking. Now, for those of you who have jumped on this opportunity really early on, let's discuss what happens when the forbearance comes to an end. There are still more options after a forbearance plan has ended, and here are some of those. Let's discuss them, right? A first option is a simple repayment plan. This is when a homeowner resumes making their regular monthly payments, plus an additional portion of the missed amount each month until that missed amount really is paid off. So oftentimes, if you are coming off of a financial downturn, this is really hard to pull off. So another option might be reinstatement. The homeowner pays back any missed payments at once if they are financially able to do so. After the reinstatement, the homeowner continues to pay their mortgage under the original terms of the mortgage loan. Another option is COVID-19 payment deferral. This is when a homeowner resumes making their regular monthly payments. This solution allows the homeowner to defer the missed payments or the missed amount along with any servicing advances paid to third parties like taxes or insurance premiums until the maturity date as a non-interest bearing balance. So the deferred amount is due on the maturity date or earlier if the home is sold or the loan is refinanced or otherwise paid off. But it really goes to the end of the loan at the maturity date. Another option you might have is to refinance. When a borrower exits forbearance and enters a loan mitigation plan, the borrower is eligible for a new mortgage loan after they make at least 3 timely consecutive payments as of the note date of the new transaction. It is important to note that these 3 payments must be consecutive and may not be made as a lump sum payment. A final option from a lender is a Fannie Mae flex modification, of course, if you have a Fannie Mae loan. If a homeowner has experienced a permanent impact to their ability to pay their regular monthly mortgage payment, this is an option. After the homeowner completes a trial period plan, all eligible unpaid amounts are added to the unpaid principal balance. Then monthly principal and interest mortgage payments are permanently modified to what may be really a lower amount. So this option could definitely help a homeowner in need. But here's really the bottom line. Whatever your financial situation you have found yourself in post-COVID, be informed about each option and find the one that most suits your particular situation. One final idea that is really the most simple is to consider liquidating your home, no matter the condition. That's where someone like Trusted House Buyers can help. If the financial burden is too much, we can just come in, offer you a cash offer, take your home as is, close on your terms anytime. You can always call us at Trusted House Buyers by dialing 619-786-0973. We'd be happy to talk about working with us as an option and how that might benefit your particular situation. So thanks for watching today. We really appreciate it.